Hello everyone, welcome back to the channel. Today we are discussing the latest updates surrounding the Iraqi dinar and the Vietnamese dong as speculation continues building across global currency markets. Investors around the world are closely monitoring economic developments, oil prices, diplomatic negotiations, and central bank movements as new discussions emerge about the future direction of these two highly watched currencies. Over the last several days, renewed attention has focused on the possibility of a major shift in Iraq's financial position, while Vietnam's rapidly growing economy continues drawing strong international interest from investors and multinational corporations. The biggest conversation dominating currency communities right now centers around the idea that the Iraqi dinar may not simply experience a normal exchange rate adjustment, but instead could eventually move through what many supporters describe as a reinstatement process. According to this theory, the Iraqi currency's historic collapse was not caused purely by traditional economic weakness, but by years of international sanctions, conflict, and financial isolation that dramatically reduced Iraq's standing in the global economy. Investors following this theory argue that once sanctions and restrictions disappear completely, the dinar could potentially return to values seen before the early 2000s. Many longtime dinar followers continue pointing toward the exchange rates that existed before 2003, when the Iraqi dinar reportedly traded above $3 in certain international calculations. Supporters of the reinstatement theory believe Iraq's enormous oil reserves, strategic global importance, and improving diplomatic relations could eventually support a much stronger national currency. Some speculative investors continue discussing levels around $3.22 per dinar, while others believe values near $3.80 remain possible if Iraq successfully modernizes its banking system, strengthens foreign investment, and maintains political stability over the long term. Despite these discussions, financial experts continue warning that there has been no official confirmation from the Iraqi government or the Central Bank of Iraq regarding any immediate large-scale currency reinstatement. Economists emphasize that exchange rates are influenced by multiple factors including money supply, inflation, reserves, debt obligations, productivity, and investor confidence. Still, the speculation surrounding the dinar remains one of the most discussed topics in online investment communities, particularly as Iraq continues announcing new economic reforms and energy partnerships. At the center of Iraq's economic strength remains the oil sector. Iraq continues ranking among the world's largest oil producers, and high global oil prices have significantly improved government revenue over recent years. Analysts say rising oil income has allowed Baghdad to increase infrastructure spending, strengthen currency reserves, and support reconstruction efforts after years of conflict and instability. International energy demand continues providing Iraq with one of the strongest financial foundations in the Middle East, especially as global supply concerns keep crude prices elevated. Recent reports suggest Iraqi officials are continuing efforts to modernize the country's financial system by reducing cash dependence, digitizing banking services, expanding electronic payment systems, and increasing transparencies across the banking sector. These reforms are viewed by investors as essential steps toward creating international confidence in Iraq's economy. Currency supporters believe these modernization efforts could eventually position Iraq for stronger integration into global financial markets. Another major factor influencing investor sentiment has been the changing geopolitical environment across the Middle East. Global markets reacted strongly after conflicting reports emerged regarding possible progress toward a peace understanding between the United States and Iran. Currency traders experienced sharp volatility as investors attempted to interpret signals coming from diplomatic discussions and international negotiations. Some analysts believe any reduction in regional tensions could improve economic stability throughout the Middle East, potentially benefiting countries like Iraq that sit at the center of regional trade and energy networks. According to international market reports, the U.S. dollar remained close to a 6-week high, following intense overnight trading activity. Investors continued moving towards safe haven assets amid uncertainty surrounding inflation, central bank policy, and geopolitical risks. The dollar index held near the 99 level against a basket of major global currencies, showing continued strength despite ongoing debates over the future direction of the American economy. The euro slipped slightly against the dollar as traders reacted cautiously to shifting market conditions. Meanwhile, the British pound stabilized after recent political uncertainty in the United Kingdom caused sharp fluctuations in sterling markets. Currency analysts noted that while the pound recovered some losses this week, investors remain cautious about long-term economic challenges facing Britain. Across Asian markets, the Japanese yen continued weakening under pressure from high oil prices, and the strong US dollar trading beyond the 159 level against the dollar. And increasing speculation about possible intervention by Japanese authorities. The strength of the US dollar has remained one of the most important factors affecting global currency markets. A stronger dollar often creates pressure on emerging market currencies because many international transactions, debts, and commodities are priced in dollars. However, supporters of the Iraqi dinar argue that Iraq's growing oil revenues could help offset some of these pressures by bringing additional dollar inflows into the country's reserves. They believe continued energy exports and rising global demand could strengthen Iraq's long-term financial position, despite broader market volatility. At the same time, attention has increasingly turned toward Vietnam and the future of the Vietnamese dong. Vietnam continues emerging as one of Asia's fastest-growing economies, driven by manufacturing expansion, foreign investment growth, export strength, and strategic trade partnerships. International companies continue relocating production facilities to Vietnam as businesses seek alternatives to traditional manufacturing hubs. This shift has significantly increased global interest in Vietnam's economy and long-term financial outlook. Over the past decade, Vietnam has transformed into a major export powerhouse, producing electronics, textiles, machinery, and consumer products for markets around the world. Analysts say the country's young workforce, competitive labor costs, and strong trade agreements have positioned Vietnam as a critical player in global supply chains. As multinational corporations continue investing billions into factories and infrastructure projects, investors are closely watching how these developments could influence the Vietnamese dong in the years ahead. Currency speculation surrounding the Vietnamese dong has intensified online, with some investors believing Vietnam's rapid economic growth could eventually lead to a stronger exchange rate. Supporters argue that expanding exports, rising foreign reserves, and increasing industrial capacity could create upward pressure on the dong over time. However, economists generally caution that Vietnam's government prioritizes currency stability and export competitiveness, rather than dramatic exchange rate increases. Financial experts explain that Vietnam benefits from maintaining a controlled and relatively stable currency because it helps support exports and attract manufacturing investment. A rapidly rising currency could potentially make Vietnamese goods more expensive on international markets, reducing the country's competitive advantage. Because of this, analysts believe Vietnamese authorities are likely to continue pursuing gradual economic strengthening rather than sudden revaluation scenarios, often discussed in speculative investment circles. Still, enthusiasm surrounding the Vietnamese dong remains strong among many currency watchers. Supporters point to Vietnam's rising global influence, strong GDP growth, and increasing trade partnerships as signs of long-term economic momentum. International investors continue viewing Vietnam as one of Southeast Asia's most promising economies, particularly as the country expands technology manufacturing and strengthens relationships with major trading partners, including the United States, Japan, South Korea, and European nations. Global financial conditions are also playing a major role in shaping investor expectations for both the Iraqi dinar and Vietnamese dong. Central banks around the world continue battling inflation while balancing economic growth concerns. The U.S. Federal Reserve's interest rate policies remain one of the biggest drivers of currency movement globally, with investors closely monitoring every signal regarding future rate decisions. Higher U.S. interest rates typically strengthen the dollar because they attract global capital into American financial markets. Oil prices remain another critical factor affecting market sentiment. Continued geopolitical uncertainty, supply disruptions, and energy demand concerns have kept oil markets volatile. For Iraq, higher oil prices generally provide significant economic support because petroleum exports represent a major portion of government revenue. Rising energy income can strengthen reserves, support public spending, and improve fiscal stability. Investors believe these conditions could help Iraq continue rebuilding its economy and potentially strengthen confidence in the dinar over time. International banking reforms are also being closely watched by dinar investors. Reports of modernization efforts, anti-corruption initiatives, and electronic payment expansion have fueled speculation that Iraq is preparing for deeper integration into the global financial system. Supporters believe improved banking infrastructure could attract foreign investment and create greater confidence in Iraq's monetary future. At the same time, critics continue warning investors to remain cautious about unrealistic expectations. Many economists argue that achieving exchange rates above $3 per dinar would require extraordinary economic conditions, tight monetary control, limited money supply, and sustained international confidence over many years. They emphasize that while Iraq possesses enormous natural resources, rebuilding a stable and diversified economy remains a complex challenge involving political reform, security improvements, infrastructure development, and financial transparency. Vietnam faces its own set of challenges despite strong economic momentum. Analysts note that global trade slowdowns, inflation pressures, supply chain disruptions, and international market volatility could still affect Vietnam's export-driven economy. However, many economists remain optimistic about Vietnam's long-term growth trajectory because of its strategic location, expanding industrial base, and growing importance within global manufacturing networks. Investor communities across social media platforms continue debating every new development related to both currencies. Online forums remain filled with speculation, predictions, and analysis regarding future exchange rate possibilities. Some investors believe major geopolitical shifts could trigger dramatic currency movements, while others argue that gradual economic reform remains the most realistic path forward. The role of international diplomacy cannot be ignored in these discussions. Relations between major global powers continue influencing financial markets, commodity prices, and investor confidence worldwide. Any significant changes involving the United States, Iran, China, Russia, or Middle Eastern nations could potentially impact energy markets and emerging market currencies. Traders remain highly sensitive to headlines involving sanctions, trade agreements, military tensions, and diplomatic negotiations. The US dollar's recent strength has also affected investor behavior globally. Safe haven demand continues supporting the dollar during periods of uncertainty, especially as concerns persist about inflation and economic slowdown risks in various regions. Analysts say many institutional investors still prefer holding dollars during volatile periods because of the currency's global reserve status and relative stability compared to emerging market currencies. Even so, supporters of emerging currencies like the Iraqi dinar and Vietnamese dong believe global economic power is gradually shifting toward resource-rich and manufacturing-driven economies. They argue that countries with strong export sectors, strategic geographic positions, and growing industrial capacity could become increasingly important in the global financial system over the coming decades. In Iraq's case, supporters continue highlighting the country's massive oil reserves as a potential foundation for future financial strength. Iraq possesses some of the largest proven oil reserves in the world, and energy demand is expected to remain significant for years, despite growing interest in renewable energy sources. Investors believe sustained oil income could help Iraq continue funding reconstruction projects, stabilizing government finances, and improving infrastructure. Meanwhile, Vietnam's manufacturing rise continues attracting global attention. International corporations continue investing heavily in factories, ports, logistics networks, and technology production throughout the country. Analysts say this industrial growth could help Vietnam continue expanding its influence within international trade networks, potentially supporting stronger long-term economic fundamentals. Despite the excitement surrounding these currencies, experts consistently remind investors that currency speculation involves substantial risks. Exchange rates can be influenced by unexpected political events, economic downturns, policy changes, wars, sanctions, inflation, and market sentiment. Financial professionals generally encourage investors to conduct careful research, understand the risks involved, and avoid relying solely on speculative online rumors. As trading markets prepare for another critical period, investors remain focused on upcoming economic data, central bank meetings, oil price movements, and geopolitical developments. Every new report involving inflation, interest rates, energy production, or diplomatic negotiations has the potential to influence market expectations for currencies worldwide. For Iraqi dinar supporters, hopes remain centered around continued economic reform, rising oil revenues, banking modernization, and improving international relationships. Many believe Iraq still possesses enormous untapped potential because of its natural resources and strategic importance. For Vietnamese dong supporters, optimism remains tied to Vietnam's manufacturing growth, expanding exports, and increasing role within the global economy. Whether these expectations eventually lead to major exchange rate changes remains uncertain. But one thing is clear, both the Iraqi dinar and Vietnamese dong continue attracting extraordinary global attention. Millions of investors around the world are closely monitoring every development, searching for clues about the future direction of these highly discussed currencies. The coming months could prove especially important as global markets continue responding to inflation trends, energy prices, geopolitical negotiations, and central bank policy decisions. Investors will be watching closely to see whether Iraq can maintain economic momentum and whether Vietnam can continue sustaining its remarkable industrial growth. At the same time, the broader direction of the U.S. dollar will likely remain one of the most powerful influences shaping global currency movements. For now, speculation surrounding the Iraqi dinar reinstatement theory and the long-term outlook for the Vietnamese dong continues dominating discussions across investment communities worldwide. While no official announcements have confirmed the dramatic scenarios discussed online, enthusiasm remains high among supporters who believe significant financial changes could still emerge in the future. As always, global investors are encouraged to separate speculation from verified economic policy while staying informed about real-world financial developments. Markets remain highly sensitive to political events, economic indicators, and international relations, meaning volatility could continue across currency markets in the weeks ahead. Still, for millions of dinar and dong followers around the world, the possibility of major future developments continues keeping attention locked on every headline, every policy signal, and every movement within the global financial system.